Hello, and you're welcome to Global Business Insights, where we look at headlines from a deeper business perspective. UK inflation just out for August came in steady, holding steady with the previous July 2.2% print. This is just a day ahead of the Bank of England Monetary Policy Committee meeting. That's tomorrow. Headline CPI had come in at 2% in May and June, in line with the Bank of England's target rate. Air France, KLM and the Lufthansa have suspended services to Israel and some other destinations in the region amid rising tensions. Air France KLM suspended services to Tel Aviv and Beirut till September 19, as other airlines also avoided Iranian and Israeli airspace. Nigeria's annual inflation dropped to a 6-month low in August, 32.15%. We apologize for misspeaking and quoting 33% on Monday. The lower rate offers the Central Bank Monetary Policy Committee a window to halt an unprecedented tightening cycle when they meet next week. We will replay our earlier chat on the Nigerian inflation data. Gold prices hovered near a record high yesterday ahead of anticipated start of the US interest rate reduction cycle. There is scope for gold to go even higher amid Middle East tensions escalating after Hezbollah blamed Israel for an attack that killed a number of people and left almost 3,000 wounded across Lebanon. The US Federal Reserve is heading for its first, most likely 25 basis points interest rate cut since the onset of the COVID-19 pandemic, and global investors are braced for the impact. There will also be additional detail in the Fed's latest summary of economic projections. That's a quarterly update that plots officials' latest forecasts for the US economy, inflation and also interest rates. US stocks closed mixed yesterday ahead of the FOMC decision. The S&P 500 was just barely positive in the final seconds of trading, as some still held to the possibility of a 50 basis points cut, which most say is unlikely in view of the geopolitical uncertainty with looming elections. More US data. Government reports showed US retail sales unexpectedly rose in August and manufacturing rebounded. US factory output increased 0.9% last month, better than expected, and after a downward revised 0.7% drop in July. US retail purchases helped by online stores increased at a faster clip than expected at 0.1% after a revised 1.1% gain in July. BlackRock is launching a more than $30 billion artificial intelligence investment fund with technology giant Microsoft to build data centers and energy projects to meet growing demands stemming from artificial intelligence. The fund, which BlackRock is launching with its new infrastructure investment unit, Global Infrastructure Partners, will be one of the biggest investment vehicles ever raised on Wall Street. And JP Morgan Chase has held initial talks with Apple on taking over the iPhone maker's credit card program, currently managed by Goldman Sachs. In South Africa, confidence among consumers surged to its highest level since 2019. That's in Q3 on the back of positive developments. The FNB BER Consumer Confidence Index just released jumped to -5 in Q3 2024, recording a second consecutive 5-point increase from -10 in the second quarter. Developments include the formation of a government of national unity, less load shedding, a strong rand exchange rate, substantial fuel price declines, deceleration in inflation, and expectations of interest rate cuts in coming months. And Nigeria has announced a major investment decision on a $550 million upstream gas project. We have another chat on the energy sector in Nigeria. Indeed, the Bank of England is widely anticipated to keep interest rates unchanged at 5% after a 25 basis point cut last month. This is as data out this morning showed headline inflation steady at 2.2%, slightly ahead of the Bank of England's 2% target. Prices for airfares rose, but the increase was offset by lower fuel prices and falling costs at restaurants. Services inflation, which has been closely watched by the Bank of England as it decides whether to cut interest rates, rose from 5.2% to 5.6%. Core CPI, that is excluding energy, food, alcohol, and tobacco, also rose by 3.6% in the 12 months to August, up from 3.3% in July. At the inaugural US-Nigeria Strategic Energy Dialogue, the government of Nigeria highlighted key sector reforms to close the energy gap for 100 million people, including directives issued to cut cost and time of contracting for gas projects, also announcing the kickoff of a new $550 million upstream gas set to deliver 350 million standard cubic feet of gas per day. Deepening collaboration with key partners is on the front burner for the special advisor to the president on energy, Olu Verheyen, as President Bola Tinubu hopes to immediately unlock up to $2.5 billion in new oil and gas investments in the country. I have been closely watching the Nigerian energy sector for decades and focusing on debottlenecking contract processes and deepening collaboration is no doubt key, but this is more like attacking symptoms of an industry model that is overdue for reconstruction. Like someone recently said, investments are like butterflies, naturally attracted to the garden if it's attractive. The butterflies do not do the job of the gardener, so the effort to chasing butterflies should be redirected to reimagination of the sector and setting it on a sustainable path for the future. Well, we celebrate progress in kickoff of production in the Dangote refinery, a monopoly of sorts in partnership with the NMPCL in the downstream is not the answer that offers the sustainability and resilience that Nigerians need. Senior business analyst Lekon Shote comments on the situation with the refinery.
Obviously, Nigerian National Petroleum Company Limited has failed woefully in running its 4 refineries, and it has finally been forced to admit its incompetence. In the past, those who run NNPCL will extort huge amounts of money from the federal government for what they called turnaround maintenance, and there will still be zero production from the refineries. Those who run NNPCL seem to prefer to ship crude petroleum abroad in exchange for more expensive petroleum products. It looks like there is some advantage to them in that loop. It was confirmed that their crass inability to manage their cash flow so that they can settle their trade debts without problem is actually the major cause of the recent shortage of petroleum products in Nigeria. NNPCL is reported to owe about $6.8 billion to its foreign suppliers. Now that Dangote Refinery, which they may have been watching with great trepidation, is finally ready to fill the vacuum of supply that they left vacant, they have muscled themselves in as sole off-taker of the products between Dangote Refinery and the marketers. They may have done this to make it look as if they are a part of the Dangote solution, or as a strategy to make themselves relevant in the supply chain and to be able to keep their jobs. Observers are, however, concerned that the NNPCL may bring their lethargy into the supply chain and start owing Dangote Refinery, or simply be unable to maintain the fleet of tankers that will evacuate the products from Dangote works to the market. That will lead to another round of scarcity and black market racketeering. President Bola Tinubu, who is also the Minister of Petroleum Resources, should find a way to separate Dangote refinery from the dreadful NNPCL system. He should, in fact, get the NNPCL to run their own refinery.
The dialogue last week also saw the launch of a new Nigeria-focused initiative, the Clean Energy Alliance of Nigeria, by the U.S. State Department to mobilize stakeholders to support and promote investment in clean energy in Nigeria. Let's be clear, what is lacking is not good intentions, but vision and long-term strategic thinking and fresh ideas that puts the Nigerian energy sector on a much better footing, plus modern technology-driven momentum to accelerate changes that can rescue the industry from status quo forces and realize an incredible potential given the vast resources and talent in Nigeria, making the Nigerian energy sector future ready. Still on the metaphor of making the garden beautiful and to illustrate an example of reimagination of the energy sector, McKinsey Africa, in partnership with the Hydrogen Council, looked at the potential of hydrogen in Africa. The report says Africa is strongly positioned to become a renewable hydrogen and derivatives producer and exporter, and could generate as many as 13 million new jobs by 2050, including jobs linked to both the construction and operation of renewables sites, hydrogen production facilities, conversion plants, and export infrastructure. It adds that hydrogen product exports could increase Africa's export value by over $15 billion annually also by 2050. But the report also notes that higher country level risk and project execution risks are driving up financing costs, making the expected hydrogen production cost of African countries higher than those in the Middle East and Australia. Comprehensive de-risking strategies are indeed a very important part in making the garden attractive. These have to be addressed at the strategic and structural level. Nigeria's headline inflation slowed down to 32.2% in August 2024 for the second month, and also the lowest read in 6 months, down from 33.4% in July. Food inflation was down to 37.5% in August from 39.5% in July due to higher yields and the 6-month duty-free window for corn and wheat imports. But core inflation, which excludes agricultural produce and energy, rose to 27.6% from 27.5% in the previous month. On a monthly basis, consumer prices increased by 2.22% in August compared to a 2.28% rise in the prior month. On a month-on-month basis, the core inflation rate was 2.27% in August, higher than 2.16% in July. Sticky core inflation was due to high rents, transport, accommodation, and medical services. The slowdown in inflation does raise the possibility that the Monetary Policy Committee could pause a tightening cycle as it announces its decision. That's next week, September 24. The MPC has lifted the benchmark rate to 26.75% from 11.5% in just over 2 years, and may need time to assess the impact of recent currency volatility, devastating floods in northeastern Nigeria, and the increase in gasoline prices on inflation. Still, if we do get a rate increase from the MPC, given higher core inflation, it more likely will be a lower basis points increase than prior rate adjustments. Asia Pacific shares were mixed as investors prepared for the much expected interest rate cut by the US Federal Reserve later today. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Thanks for watching. Bye-bye.